All right, this is your market recap for May 7th, 2025. Today we did play bullish after a very, very long and choppy time waiting for FOMC. We have this new day opening gap here. That's what we've been reacting off of. And we reacted off of the lower quadrant again today. So going off that, you can see on the hourly until 2, which is this candle right here, didn't really do much. Went down all the way here, back up, all the way up here, down, and then up, and then, it's a lot of not really going anywhere. Two notable reactions, though, is one off this low, which caused lunch's retrace, and one off this low, which obviously caused the expansion out of kind of the slight downward trend that we were in. If we go down to the 15-minute notable fair value gaps is this one right here, which causes the market to continue going downwards. Yeah, we break down, react off of it once, market opens, we chop up, come up here, react off this 15-minute and come take out the lows. Now, I personally was long today, even from here. I liked this, right? So this is accumulation. So this bearish expansion was good to me. It was fine, because I viewed it as manipulation. And then I was expecting distribution upwards. Mind you, I was predicting and expecting to get suboptimal price action just because FOMC was later in the afternoon, and that surely delivered. So, yeah, I expected us to react off of this, or to be kept up by this large 15-minute fair value gap here. Didn't really happen. These closures here on this 15-minute sets us up nicely for lunch to retrace the most recent move from there. Or I don't know why I said that like that, but react off this 5-minute, which you'll see on that time frame down to here. Another quick little dip down here, reversal. FOMC definitely was the cause of this. If we look 2 o'clock, boom, right here, this red candle perfectly came down, took out this low, and then reversed. So definite manipulation there. Yeah, you can see here we were playing accumulation, manipulation is what I saw. So I took a long here, targeting, was this one of my profits? I think it was. And this is my finals. But unfortunately, I got stopped out by this bearish candle first, which again, typical of FOMC, take out liquidity when it's, I'll say, not supposed to, and make higher runs or lower runs than it's supposed to. But we take out this high, react off this 15-minute fair value gap, come lower, bodies, look how they close right around this liquidity over here. So that tells us that we're going to most likely, that paired with the time, right, it's lunchtime, tells us that we're going to retrace. If we look at this move, equilibrium's here, so that my profits, if I took this, which mind you, probably wouldn't want to, just given this price action, profits would be at least there at equilibrium, maybe even higher if you saw this 5-minute there. And then we expand lower, take out this low, big manipulation with this candle here. Take out this low, immediately stop that, and come all the way back up. FOMC day, I'd say price follows a pattern, but it's atypical, right? It's atypical until we hit FOMC and all that happens, and then boom, back to normal. Sweep of liquidity, SMT of the lows, distribution upwards, playing to the overall bias of the day and the week. So, Forgot to talk about this fair value gap. We see this fair value gap here, reacted here, nice closures there, and then boom, once, twice, closures, concentric encroachment takes us up for the macro, the 315 to 345 macro, right? We see 315, price drags down to a discount and then expands higher to the 45, taking out this high. Now, I was bullish. I entered off this, right? We had an SMT of these lows, so I entered, I think I entered here. My stop was somewhere down here. I think it was concentric encroachment of this wick and a little lower. Actually, I don't think this was my profits. This was my break. Sorry, this was my break even. It was here. This was profit one. Was that? No, this was profit one up here. So, unfortunately, didn't even hit that. But FOMC, right? We had usually, since this low did not go below this one, but it did on ES, that means that at least for buy side, this is safe, right? These lows right here are usually safe when that happens. But FOMC in the forecast, come take it out, another SMT there, and then we play bullish, targeting the liquidity there. SMT of these lows you could have played off of, but again, would have been kind of painful. Catch an expansion, we have to wait half an hour just for price to retrace and then go. It's just subpar. In the future, FOMCs for me will be hands off until 2 o'clock. So, I mean, that was the plan, but in the past, I had seen mornings of FOMC play pretty nicely. So I tested my luck, but won't be doing that in the future. Because I was expecting lower probability conditions, so I did risk significantly less. I think I risked half of what I usually do. SMT here, ES went way higher, taking out this intermediate high. Nice reaction off this 5 minute. Unfortunately, this is an SMT, yes, but it's too high time frame. I need a lower time frame one to kind of solidify that we're starting now, because there's a whole lot of space between here and here for price to still climb up and take it out. So after that, lunch retrace, continue the move of AM session. 2 o'clock hits, FOMC rallies prices. Fair value gap right here, perfect. Actually, even more perfect. Inverse fair value gap right here. Validation, these candles, down, up, reactions here, inverse fair value gap lower. Probably wouldn't have taken that just because, well, we're already decently low. Just took out this low, could reverse, whatnot. FOMC drives prices down to here. Then we kind of reverse pretty quickly, get an SMT here, nice expansion. Trade of the day is on ES, somewhere within this fair value gap, taking that long, targeting these highs here. Well, technically these highs, but yeah, 315, 315 to 345 macro, like I mentioned earlier. Price retraced all the way to a discount. Not entirely sure what. Definitely concentric encroachment of this 5 minute. And then we boom, rocketed all the way up here to take out these highs. So yeah, that's kind of today. You can see it's a little messy, but that's the nature of FOMC. So they make it dirty so that you can't see what they're actually doing. Now, if we look here, now I've kind of been saying it all week. Monday's here. Wait, where's Sunday? Sunday's here. So we've had a bearish leg. So I'm looking for either a bullish expansion above at least these highs, or just a really small candle. We've had pretty expansive candles. It could afford a rangy rangy week. Definitely had a rangy week. But I still like buys. I like our reaction off this low. Unfortunately, this high time frame SMT that was kind of solidifying my bias is no longer there. But with this reaction off this low, still looking to play bullish. So yeah, we'll really just see what market gives us. But yeah, this has been your market recap for May 7th, 2025.